Hello everyone, Justin with Deep Dive Stocks here, and today we're going to be looking at another feature of LDPS, which is I have a pencil, the text, right? So we're going to look at what it's telling us, how we can interpret it, and have some fun along the way. This isn't meant to be a super in-depth guide. There is quite a bit of not nuance, but there is quite a bit of complexity to the text. But I want to introduce some of the ideas to you so that in later videos, when we get into the more granular detail of these indications, it doesn't feel too awkward or misplaced. So I'm going to try to do this with this handy dandy writing, and we're going to see how it goes. To start, I figured, we need a chart to look at, so I just chose GME since it's had a lot of recent action. And let's see. Actually, this is a really good place to start. I have the text here on the bottom, as I pointed out. And so the name of the game is, what do these words mean? Which is a question I think a lot of us are asking lately. To start, we need to see what these words can tell us. Right now, it's telling us two things. At the top, let's see, this is either going to be really fun or not at all. It tells us where transactions are occurring. I'm going to try to spell correctly, but no promises. The flow, see now, is it like worth, maybe, tells us where the origin of liquidity is moving. So we have two bits of information that these words tell us. The first is who is the predominant actor, so where are these transactions occurring? And then two is where is liquidity moving? And I really don't want this to be too long of a video going in too much of the weeds, but I guess it does suffice to say that the overarching philosophy of deep dive stocks liquidity is centered around the idea that liquidity, the source of liquidity moves between the ask and the bid. Sometimes it's towards the bid, and then sometimes it's towards the ask. What that means is when liquidity is closer to the bid than the ask, right? So we move that far away, then it tells us that transactions, or the ability to transact, are becoming dependent on the bid. So in other words, when we see that liquidity is moving to the bid, it tells us that the bid is in control. It's the actor in the market that's currently deciding if trading can happen. And then conversely, if we see liquidity moving rather, I want to get rid of this, here, then we know that the ask is in charge. Now, this has some pretty particular consequences. And to note, this is pretty deviant from traditional understanding of liquidity in the market, because it's usually assumed that the ask supplies liquidity and the bid removes it, right? Because if I'm not mistaken, or it's reversed. The reason I don't really remember is because it doesn't make sense and it's just not true. But whichever version is the one that most people say, that is also the incorrect version. The who sort of is setting the beat to the drum, or the who's setting the beat to the price action, can change depending on who's entering and who's exiting the market at that particular time. So it's just insufficient to classify liquidity suppliers and liquidity takers simply based off of if they are a bid or an ask. And that is what these texts help us identify. So we know that liquidity, so let's leave this up. So if we envision liquidity as a sort of nexus, it's kind of like the word that always comes to my mind. Like it's the font of liquidity. And it's somewhere between the bid and the ask, mathematically. It can, it can move either way. We have to ask ourselves, well, what happens when the bid has liquidity and what happens when the ask has liquidity? To this, we say the organic bid and the organic ask. So what happens when these two parties have liquidity? So I'm trying to think. I don't know how much detail to give on the bid and the ask. I'm assuming you guys understand what a bid and the ask is. But I do feel like it's important to point that, again, I think traditional understanding of the bid and the ask is not complete in the markets, at least that I've seen. And we're going to highlight that here. So if someone's an organic ask, what does that mean? Well, it means that they are value seekers. So they are value seekers. And this is true for both the organic bid and the organic ask. Actually, you know what we should do while this is happening? Let's just watch Bitcoin on like the 5-minute. We'll just shove it right over there. So there we go. So like we have an aggressive ask, we have aggressive bid, so we have some nice real life things that we can watch while this is all happening. Let me erase this real quick just to clear up the screen. And again, this is definitely going to be a longer form video, so feel free to skip ahead. I'll try to put timestamps, but no promises. So we have this. Let's ask ourselves real quick, what does a value seeking ask do? What do they do? Why do we care if someone's an organic bid, organic ask, or an eager ask, or an aggressive ask? Well, probably I would say two things. One, why they're there, and two, what it means. Right? Those are the two main things that we're interested in when we're classifying these parties. For the organic, the value seekers, the why they're there is for value. This means that the ask, what they want is to sell high, and the bid wants to buy high or buy low. Wow. That might be, I guess I have to figure out I wonder, I hope that's not too annoying with the LDPS symbols. Yeah, a little better, okay. So that's what the value seekers are doing. The organic bid wants to buy low because as value seekers, they have long time horizons and they eventually want to sell high. So the bid wants to buy low so that they can become an organic ask. So this is the cycle, right? You become an organic bid for value seeking, and then the value goes up over a particular time frame, and then you become an organic ask and you start taking your profits. This selling high though is, I get a dribble, right? Like they're not the ones eager and desperate to get out of positions. Like say if you were being short squeezed as a short seller. But the consequences, so now that we know why they're here in the market, the consequences is when the organic bid has liquidity, this means the price is likely going to go down. Why? Well, as value seekers, if they see the ask is moving to them and their time horizon isn't today, it's not tomorrow, it's not this week, it's years out in the future, it's only the right thing to do in the market if you are the supplier to demand to use that to your advantage, right? That's kind of what capitalism is. So these moments will drive the price down as bid low is like the main supreme idea. So whenever we see the organic bid starting to become the decider on price action, on transaction, the natural inclination to use that to their advantage is to see price decline. The organic bid, oh, can I do this? Oh, that's so much better. Oh, that's so much better. So the organic ask, however, and let me know if you guys like this format. They want to sell high. So when the organic ask has liquidity, the consequence is usually price appreciation. So we have these two sort of agents in the market. And if we kind of start building a little diagram, we have this organic ask, and then way down below, we have this organic bid. When liquidity is moving towards the ask, that means that the ask is setting the precedence. So you're likely going to see price appreciate. If liquidity instead is moving to the bid, then you're likely going to see price depreciation. And again, this is just because the idea of the organic bid and the organic ask is that they are long-term value seekers. And these are usually represented by those LDPMs 5 through 7, which are 144, 322, 144, 377, and 610. That almost looks like a 7. And 610. Those are kind of, and those are why those are on the default for LDPM. Let's do like 1 minute. That's exciting. Where the hell? Okay. There you go. Right. So currently we see the text. Oops. That transactions are occurring at the organic bid. And that means that the ask is stepping down to the organic bid, and the consequence is price depreciation. And it's in the near term, right? In the longer term, it does give some hope when you see an organic bid come in, especially if you see an organic bid come in and start really digesting an aggressive or an eager ask, because again, they're value seekers. So if it's a show of force from value seekers, it means that there's a show of force or there's a strong confidence in the value increasing in the future. But in the near term, the structural and functional consequence of the organic bid realizing that they're the keys to the kingdom is that the price is likely going to fall, and it may fall substantially, until someone changes their mind. Usually an eager bid walks in and starts outbidding the organic bid. But those are the organic designators, right? So we have organic. The next one that we are concerned with are the eager parties. Now, the eager parties, if we get rid of this, if we go back to a more traditional view of the order book, and say you have right here is the, either the midpoint or current spot, what have you. The eager parties are the ones that will cross that boundary in order to transact. So they're not interested in, these aren't really the value seekers. These aren't the long-term time horizons. These are people who have a sort of urgency. I call it market, the cost of urgency, the cost of dependency, right? So this is someone who needs to transact, and they're not here to transact in a value-driven way. They are more than happy to cross the aisle to transact at the other side of the book because they simply need to transact. So these are the eager bids and the eager asks. These have a opposite consequence than the organics. When we see the introduction of an eager bid, we know that it's transacting up to the organic ask. Let's get rid of that guy. Maybe I do this. So we have the eager bid moves to the ask. And if it's the organic ask, then we know that the consequence is definitely going to be price appreciation. And it usually almost always is, unless you do get some funky, like if an aggressive walks in. But for 90% of the time, the response is a price appreciation, right? And the idea is that what LDPS is detecting is that you have this organic layer, in this case bid, but now you're starting to get stragglers, right? You're just starting to get these opportunistic parties that are moving up to the ask. And this will naturally, and the bid will kind of just, the organic bid will just kind of hang out below where they've been hanging out. And this will help drive price up. And functionally, you will see this a lot when you have those really big distances between LDPMs and price has really driven, been driven upwards. This space is the difference here, right, between those different levels of LDPM and the different parties in the market. I'm gonna do. It's like cool on my screen, too red. Okay, back to the scheduled programming. So the eager parties, when they step in, you are looking at that opportunistic behavior. We're noticing that there's a few people who either aren't value seeking or have too much of an urgency to transact, to accomplish some action in the market, that they're just simply not interested in waiting for that value. They are going to move directly up to that ask. And when they do so, they typically will move, and in this case, we're going to say that they're always moving up or down to the organics. We'll leave the more variety of combinations, right, to another video. So in the same though goes for the ask. So if we have this ask and then we have these opportunistic eagers moving down to the organic bid, organic bid. Since the eager parties will cross, and this is like the midpoint, or I call it the aisle. It's like an expression from the fire department when you go from like being a medic to a firefighter. I would say the other way around, but no one ever does the other way around. It's called crossing the aisle, and the idea is you're just going to the other side. And so when we get this eager ask eagerly crossing this aisle to transact, and then especially when they're meeting an organic bid, this is definitely a negative moment in time for that current spot. Let's see. I moved the text down here for it to be easier to see, and then I put the pencil thing right on top of it. Right. So that is the organic and the eager, right? What we see now, though, on Bitcoin is aggressive. So what is that about? The aggressives are a unique sort. You don't see them often, but they're the ones. So if we have the ask, and then we have the bid, let's say this is like organic. They're the ones that are moving beyond. So they move beyond organic bid. And by that, it's indicated that they will push price lower than even usually the organic bid expects, right? So these typically result in drastic price depreciations when it's like an aggressive ask. And these are the ones that usually cause those aggressive bid ask cascades, are these parties. And that's why those cascades are so, eccentric. It's because they are being fueled by a eccentric member of the party, of the stock market. So what we see here in current conditions is we have this aggressive bid. So we have, let's draw our regular bid, and then we have our ask. This means that the aggressive is moving directly to the ask. And in fact, that's exactly what liquidity is showing us. It's telling us that the liquidity nexus is at the ask, or rather it's, flowing to the ask. So it's not quite there yet, but it's much closer than it is to the bid. And so this means that the ask is setting, I don't want to write all that out, but the ask is determining trading capability. In other words, if the ask were to suddenly leave the market right now, all of them, you would be left with a bid who cannot transact. And so this would be a liquidity, like zero liquidity. So because in this moment with this aggressive bid who is aggressively moving to the ask, if all of the ask were to disappear, this tells us that there would be no liquidity left to transact. And so that's what we're seeing when we say that the liquidity is flowing to the ask. And so in combination, this is a really bullish sign. One of the side effects of the aggressive parties that isn't predominant with, or isn't present with the organic or even the eager, is that these guys tend to cause those liquidity vacuums. And that's simply because of this, right? So if we, for instance, say this is the situation we're in, right? Where we have this aggressive ask and this aggressive bid, and the aggressive bid is digesting the organic ask and it's digesting the eager ask, and there really is no presence of an aggressive ask. Then what happens when this eager bid disappears, right? It kind of becomes the opposite. The liquidity, which was centered at the ask, and the ask is the one determining if trades can go through, suddenly disappears. You're suddenly left with this giant chasm or liquidity vacuum that the eager ask is now going to have to transverse down, or even the aggressive ask, in order to transact. So you'll start seeing the nexus of liquidity start moving back down to the bid. The drawings get, some people are so good at like writing and drawing to where it doesn't get super messy, but it is what it is. So if we were to draw like a little organic, eager, aggressive, right? And these are all ask. And then we would have the aggressive bid. And this is kind of like the cascade of, right? So those are like all of the players that can be in the market. And just as a quick recap, the organics, they're value seeking. The eagers are likely profiting, looking to exit. And this is the same for bid and ask. And then the aggressives are usually in some sort of urgency. So you think short getting liquidated, they need to buy, they need to buy, right? So they will buy wherever they can, right? And this is the same for the aggressive bid. And that's a good example, because with an aggressive bid, so say you're a short seller but you're trying to cover, this aggressive bid needs liquidity, right? It needs to find a place to transact. So an aggressive bid, so the aggressives, another good are their liquidity takers, and the organics are liquidity suppliers. And then the eager kind of sits somewhere in between, depending on just how eager they are. Right. So now we have below, we see an eager bid along with flow to bid. So what does that mean? So if we draw our bid, we draw our ask, and we see that we have an eager bid, but we see that the liquidity is moving to the bid. So there's a little bit of a mixed picture, right? We have this eager bid that is the drum, and he's moving, he will transact towards the ask. But we see that it's also the liquidity supplier. If it's the liquidity supplier, then that means that there must be a liquidity taker. EA, I guess, EB, that is taking liquidity from the current situation. And so basically this is the name of this game, paints the picture of there are two eager parties right now battling it out. And it looks like the urgency is more on the eager ask side, even though it looks as though the eager bid is the, you would think eager bid, price appreciation, but we see, over here, even though the candles are green because of that eager bid, when we're told that the flow is to the bid, it tells us that that eager bid is actually a liquidity supplier. And again, that means that there must be a liquidity taker, and the only liquidity takers are actually the aggressive bids, right, that we just said. So this could either be an eager ask or an aggressive ask. Either way, this is actually quite a little bit bearish, at least for spot. And then the idea is that the LDPS is essentially telling us, the nutshell of all this though is that the eager bid is greater than either the eager or aggressive ask. And so whereas the current spot might dip because the presence of this eager ask digesting the eager bid, we still find that the eager bid is predominant, so it should be able to digest this, and then the eager bid will move back up to the ask. And so that is what it means to see these texts, right? If we look at, let's look at some examples. I hope this has been super off the cuff. If you guys like this style, let me know. If you want a little bit more of a prepared style, let me know. But let me know. Either way, let me know. All right. But let's look here. So we have an organic ask, and then we have the liquidity. Liquidity is flowing to the bid. So this tells us that the transactions are occurring up near the organic ask, right? But that liquidity is starting to, the control is starting to move down to the bid. So in other words, early evidence of growing ask. Because if we were at the ask, if we were transacting at the ask, let's do that, I guess, a triangle. And then because the circle liquidity, and then liquidity flow, like we saw earlier, is moving to the ask, then we know that everything is moving up to transact. But when we see that, okay, we're transacting currently at where the ask is, but now things are moving down to transact, you know that the eager ask is starting to become greater than the eager bid. And that could be, you know, something to monitor. You know, oh, and then we get bearish. We can see behind me the aggressive bids walk in, eager bid, floater bid, organic ask. I wish we could see an organic bid cascade, but all right, I might end the video here just because I don't want to rant too much. But that's when we start looking at the text, it is a little bit more complicated than just LDPS coloring and LDPM on its own. And I hope this video has helped. I'm definitely going to be doing more videos in the future. You decide how you want those videos done. So if you want them like this, or if you want them a little bit more structured like my older videos, let me know. But that is the text. So just to recap, the top tells us where things are predominantly occurring, where transactions. And then the bottom, that tells us where liquidity is flowing. In other words, who is in charge. When the ask has liquidity, and it's always the organic parties that have the liquidity, the ask is, if the ask has liquidity, that means the ask is setting the beat of the drum, which means price is likely going to go up. So flow to ask is bullish, and flow to bid, and these are in general, right? You just want to make sure the top value also agrees, but bearish. And again, because you're just seeing who is kind of deciding, you know, who is, the liquidity tells us who is deciding when transactions go through and where they go through. So when you have the ask is the one in charge, you get certain behaviors, and when the bid is in charge, you get different behaviors. And we can monitor all this with LDPM and LDPS. For instance, let's look real quick. So we have an eager ask flowing to the ask. So that means that we have an eager ask. So ask, and we have an eager ask. But we see liquidity is flowing up to the ask. So that means there is a growing presence of an eager bid that is digesting through the eager ask and is now becoming the dependent party, right? So they are now becoming the party that needs the other side in order to transact. Then we get and then that bid walks through, right? So then we get the next, how that changes is, I have to find out how to, sorry, I gotta be quick. My laptop's gonna die. Unless I have with me, I don't. All right, let's power through this. So we can see in those next few candles, the bid is actually, we said originally probably an eager bid, but we see it's actually an aggressive bid, and now it's right at the ask. So we saw that transition, and we predicted it with the understanding of what those words mean, right? So we have that aggressive bid flowing to the bid, so we know that the aggressive bid is still being met by some ask, but it's predominantly going to move substantially towards that ask. And then eager bid, flow to ask, eager ask. Okay, we're going to do this all day. But Definitely recommend going through the price action. I just have to stop myself because, again, the laptop's going to die, and I don't know how that works with video recordings, and I don't know if I would redo this. But we have 3%. So I'm going to end it here. Thank you for coming. I hope this has been helpful. Like I said, it's a little experimental with the text writing, the off the cuff sort of talking. You know, I want it to feel like we're just kind of chatting, which we are. But also I want it to be educational and worth your time. So let me know if this is a good format, and if it's not, I guess I'll have to think of a different format. But otherwise, all right, guys, I will see you next time. Enjoy, and happy trading. Bye.